Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold and silver prices pull back on normal corrections in uptrends. This is very normal. We want pullbacks, we want dips, we want sell-offs. That's healthy for a market. You never want a market to just keep going up, up, up. That's a huge red flag indicator that it's going to crash, crash, crash. So if we want gold and silver to gradually keep appreciating upwards, we need some small dips like this. It's only down, a couple cents, really. It's not even a big correction. It's not like there's a huge silver crash. So anyways, the link to this article from Kitco will be in the description. Make sure to smash the like button. Let's see if this video can get 100 likes. 100 likes. That's all I ask. Everyone, go hit the like button right now. I know we can do that goal. That's it. That's easy goal. So anyways, let's jump into this article. Gold and silver prices are trading modestly down in early U.S. trading Wednesday on normal corrective pullbacks in uptrends after gold hit a 7.5-year high of $1,742 on Tuesday, basis June COMEX futures. Silver prices on Tuesday pushed to a 3-week high of $15.93, basis May COMEX futures. The charts are fully bullish for gold and for silver. They have turned bullish this week. So we are in a bull market, a bullish run right now. June gold futures were last down $5.90 an ounce at $1,677. May COMEX silver prices were last down 17 cents at $15.30 an ounce. Global stock markets were mixed to weaker in overnight trading. U.S. stock indexes are pointed toward narrowly mixed openings when the New York day session begins. This week, as global stock markets have rebounded, it's becoming more apparent to more than a few veteran traders and analysts that many markets are close to or already have factored into their prices and generic economic impact of the coronavirus pandemic. So the people are already kind of incorporating the prices and where the prices are going to be headed with COVID-19. Of course, nobody ever knows for sure on calling market bottoms or tops or knowing the ultimate economic impact of a major shock event. Still, there are emerging technical signals in several major markets that do suggest they have put in their near-term bottoms, if not major bottoms. The U.S. stock indexes are in this category. So have we hit the bottom? Are stock markets going to start recovering? What do you think? I'm curious because there's a lot of speculation, there's a lot of assumptions going on, and this could heavily affect the way you stack, the way how much the amount of returns you get, how much damage is done, and we really don't know the end all be all of COVID-19 or what that's going to look like, what the new world's going to look like. At midweek, on this holiday shortened week, markets are closed for Good Friday. Traders and investors are seeing their risk appetite wane as COVID-19 continues its destructive human toll. The U.S. saw 50% more citizens die from the coronavirus Tuesday than any other day. The U.S. and Europe are hoping. The models suggesting that next week will be the worst regarding new virus infections are correct, and the curve will have peaked for them. So is next week going to be the peak of COVID-19 killing off U.S. citizens and people around the world? In other overnight news, European stocks were pressured by a survey that suggested Germany's gross domestic product would decline by nearly 10% in the second quarter. The impact outside markets today see NYMEX crude oil prices higher and trading around $24.35 a barrel. There are reports Russia and Saudi Arabia are close to a deal to cut their crude oil production levels. OPEC officials will meet via a conference call on Thursday to discuss production cuts. An agreement is not a certainty, and now the amount of production cuts is in question. The U.S. dollar index is higher this morning, which also could affect precious metals prices. The 10-year U.S. Treasury note yielding is trading around 0.72% Wednesday morning. U.S. economic data due for release Wednesday includes the weekly MBA mortgage application survey, the weekly DOE liquid energy stocks report, and the FOMC minutes from the last Fed meeting. Now you can see the 24-hour gold spot and 24-hour silver looking very, very, very close to each other. Almost a mirror-like reflection, which means the gold to silver ratio is still still standing pretty strong right now. So technically, the gold bulls have the solid overall near-term technical advantage amid price uptrend in place on the daily, weekly, and monthly charts. So there is a bullish run, and we are looking like in the next coming months it's going to stay in the green and the positive. So the chart suggests the path of least resistance for prices will remain sideways to higher for at least the near term and probably longer. Bull's next upside price objective is to produce a close in June futures above solid resistance at $1,750. Bear's next near-term downside price objective is pushing futures prices below solid technical support at $1,650. First resistance is seen at the overnight high of $1,692 and then at $1,700. First support is seen at the overnight low of $1,670 and then at $1,650. So gold erases early losses, bulls buy the dip. So if history is proven right, and these are tweets from Kitco, by the way. If history is proven right, then gold should be set to climb materially higher than what is today. So that is very good. That's very, very, very bullish. We are in times that people say, well, that's crazy to think silver could hit $100. But we're living in crazy times, people. If you want crazy prices, well, we're living in a crazy world right now. So it's definitely more possible than ever right now. May silver futures bulls have the overall near-term technical advantage, and prices are trending higher on the daily bar chart. Silver bulls' next upside price objective is closing prices above solid technical resistance at $16 an ounce. The next downside price breakout objective for bears is closing prices below solid support at $14. First resistance is seen at $15.50 and then this week's high of $15.93. Next support is seen at $15 and then $14.75. So I'm curious to see when, as I'm reading this, some things are popping into my head, and I'm curious to see when silver's going to pull away from gold. I'm curious where you think that's going to lie. What's going to be the main factor, the main indicator that's going to drag silver away from gold markets, and silver could have its natural price, and whether that's lowering the gold to silver ratio by a couple points. What's it going to be? Will it be silver's industrial demand usage? Will it be its beneficial factors it has in the everyday world, in society, in the economy? Or will it be gold's safe haven status? What will it be? What do you think? That's a great question to ask, because right now the gold to silver ratio is still sitting extremely high, which means that silver has to make a move sooner than later. And what is that move going to look like? And what's going to be the cause of the move? All I could think of right now, the main cause would be the silver shortage and people trading their gold for silver, right? Because silver is needed so widely in the industrial world and technological world. And since we are moving into a new technological era with 5G technology and electric vehicles, where silver being the most highly conductive metal for thermal conductivity and electricity, no other metal performs like silver, it's definitely going to put silver in a very uptight position, that if there's a shortage, if there's a silver shortage and it's still needed for all of these things, all of these applications industrially and technologically, it's going to make sense that if silver is going to rise, it's going to be from this situation, or gold losing its value, right? If the gold to silver ratio lowers, that means either gold is depreciating or silver is appreciating. But more than likely, it's going to be silver appreciating, because silver has so much potential. So anyways, I'm curious what you thought about this article. Where do you think prices are going to sit in the next coming months, right? If we're going to see $20 silver again, is it going to be in a couple weeks, a couple months? a couple of years? What's it going to look like, and what's going to be the cause? I'm trying to throw these questions out because I like sparking new discussions. I like sparking new debates, new conversation, new perspectives. There's so much insight on these channels, especially the silver stackers. We have so much education, especially the more experienced stackers that have seen this stuff back in 2008, back in 2011. We've seen the patterns, we've seen the trends, we see the signals, and we know what's going on. So do not be freaking out right now. Prices are down a little bit. It's just a normal correction. It's healthy for markets, and that's what we need right now. So anyways, thanks for tuning into this video. This was Silver Slayer. The link to this article from Kitco will be in the description. I'm out. Peace.